What was a glitch?
Yeah, I see a YouTube integration.
Kranti, you're good to start.
Thank you. Thank you, Kavitaka. Good morning, everyone. Thank you for all the attendees in taking your time, okay, over the weekend. So in today's session, we will be covering unlocking the tax secrets for 2025, especially how the filing will be done for 2026 based on the checklist for individuals and businesses. And our speaker is going to be Anil Gandhi Garu. Okay. Um, and I'll cover about the TTA organization first. Okay, I think I see multiple attendees, so just want to give a quick introduction about our founder, Paila Mallareddy Garu, who is a great philanthropist. Okay, who is a great entrepreneur. He took this initiative and brought all the Telugu community together. Okay, special thanks to Paila Mallareddy Garu. And TTA is a leading national nonprofit Telangana association in United States committed for serving Indian American communities by promoting Telugu and Telangana culture. That is the mission and vision, okay, brought by Pailamala Reddy garu to unite and empower Telugu people across North America. So TTA has been the forefront to serve Indian community by providing assistance to uh, multiple areas like emergency services, community services, immigration and legal services, consular services, student assistance by facilitating the reach with respective authorities. So TTA organization is existing today in multiple major cities with a strong volunteer base, helping the Indian and American community through various charity activities. And my special thanks to ACEC members, BODs, RBPs, and RCs for setting up the great platform. Okay. And I will be so today's webinar is on taxations, right? So special thanks to our speaker Anil Gandhi Garu, who has like 20 plus years of experience in finance profession as a finance controller, CFO, and other senior executive positions. He has been working in Amazon, Starbucks, PwC, and Sun Edison. Okay, he is recognized as a top 20 CEOs of 2022 in USA, and also accepted by Forbes into Forbes Finance Council member. I welcome Anil Garu to take over. Thank you so much for your support as well.
Thank you. Thank you very much, Kranti. And thanks to TTA for organizing this session. We have been consistently doing these sessions through TTA for the last few years. And I really appreciate all your commitment to serve the community and sharing the knowledge to the community. Thank you very much. Very good morning, everyone. And today we are going to talk about one of the very important and time sensitive topic, and it is related to the money. We work so hard to build wealth, but from the whatever you are earning, you are paying a lot of taxes. So whatever you work throughout the year, at the end you need to show those numbers on your tax returns and pay the taxes as applicable. So at the end, if we are paying some $50, $100 to someone, we feel so bad. Others say, but we have been paying hundreds of thousands of dollars, if not millions, from few of you guys to IRS as a just in donation box, as a donation. There are legally many ways are available. If you are in America for the last 20, 30, 15, 20 years, you might be very much used to filing your taxes. But there are a lot of ways are there to optimize it. Unfortunately, what I noticed with my experience of decades of experience in this industry, people don't spend time to find out what are their options available what are the opportunities available to optimize the taxes. Rather, they assume that they need to pay taxes, so I have to pay taxes. We all need to pay taxes. It's illegal, legally right, but you don't need to overpay the taxes because in our most we all work with most of them we all work with an accountants who just file taxes. So just we think it's an obligation. We take our W-2s or we take our business incomes, P&L statement, and we just go and file taxes. But a lot of planning can be done. So today we are going to talk about some planning options, planning opportunities, what are still available for the last year, for the year 2025. At least with this knowledge, if we can work proactively in 2026, definitely I strongly believe a lot can be saved. It's like what the money what are instead of putting in donation box to IRS, imagine if we can save that money with us and if we can reinvest for our long-term plans, long-term goals. It's our money at the end. Your accountant or someone else is not paying the taxes. You guys are paying. We all are paying individually taxes on our. We are responsible. We are the captain of our ships. If we can save the 20,000, 50,000, 100,000, 200,000, $1 million, whatever taxes you are paying to IRS, if we can keep that money with us, that money can be reinvested into multiple things, maybe in the real estate, maybe you're doing some other businesses, or maybe scaling your business. Lot of opportunities are there, but we need to work on it. So well, let's get into the topic for today. I'm sharing my screen. So all our objective here is keep the money what you earn. We work hard, but if you don't keep the money what you are earning, what is the point in earning? At the end, it doesn't matter how many millions you run as a business or how many millions you are getting or hundreds of thousands of dollars you are getting as W-2. Doesn't matter. At the end, are we able to keep the money what we are earning with us is very, very important. So today, whatever I'm sharing, just sharing my knowledge with the community. It may not, please don't take it as a specific tax advice for you because sometimes it may not be applicable for you. Please work with an accountant or CPA or at least talk to me one on one. You can see how to schedule a meetings with us. You can see all the barcodes at the bottom. We can work with us on different parameters and for different things. You can at least schedule a meeting with us and ensure that those are applicable for you before you implement any of these strategies what we are talking today. As already Kranti explained about very brief background, and thank you very much, Kranti, for covering up my experience. But at very high level, I have 20 years of experience, and I have been working as a Forbes Finance Council member for the last few years. And earlier, I worked for Amazon, Starbucks, PricewaterhouseCoopers, and we are based out of Dallas. And but we have offices in Seattle. We are starting our new office in New Jersey the next week, and we have licenses to do the business in all 50 states of America. And I am not single person. We are not a small boutique type firm. We are a 130 employees with a CPAs, chartered accountants, and other finance professionals. And if you are looking, this is a tax filing season. If you are looking for a tax filing, definitely we should be able to help. Doesn't matter where you are, whether you are in any state in America, we are able to help you. And if you are filing your taxes by February 28, you get a 10% discount. We are launching a brand new office in New Jersey area in Princeton. We will have the CPA sitting there, and I will be also traveling frequently from Dallas to New Jersey. If you are from New Jersey or New York or Philly area, definitely please you will be eligible to get well, you can get a 25% discount if you are a first time client with us if you are filing taxes by February 28th. So it's a one time, but if you are in New Jersey area, please stop by to our office as well. I will be you will be seeing more in New Jersey area for the next couple of months. Let's catch up at our office if you are coming. And apart from the taxes, we do also a lot of other services. So like tax planning, tax filing, audit services, SOC 1 audit, SOC 2 audit, reviews, audits, US GAAP reporting, M&As, mergers and acquisitions, and bookkeeping, and also fractional CFO services. And we just started mortgage loans also, mortgage loans and commercial loans. If you are looking for refinancing your loans for the best rates and best service, you can feel free to reach out to me. And in the end, I am also a chartered accountant from India. We have done with the TTA, we have done so many sessions on repatriation of funds from India to US also. Yeah. So now slowly get into the topic. Why taxes are very important? People think everyone think about taxes only in the February and March just to file taxes. But that should not be the case because taxes are the biggest expense we have. Taxes are the high taxes are much higher than our medical expenses, housing expenses, or even our students may sometimes even students education expenses. So if you have this big elephant, you need to crack it down. You need to find a way. You need to spend time in identifying how you can optimize it. But otherwise, if you don't spend the time, if you don't put your time and efforts, very simple, you will be paying a lot of taxes to IRS. And every month you have been paying taxes through your W-2, so you don't have the pain. But if you can open your last year tax return and see what is the total tax you paid to IRS in the individual tax return 1040 on the line number 24, you can see what is your total tax. You may think that okay, when you file your taxes, if they are not paying anything extra to IRS, but if you are getting the refund, you will be very happy. Unfortunately, that money you are overpaid to IRS. So every month you don't have the pay because money IRS designed collecting the taxes so beautifully. Every month, if you're a W-2 employee, every month tax gets deducted even before money gets deposited in your bank account. So you don't know the much pain. But actually, if you look into the numbers could be much bigger. You on average, you might be paying 20, 30, 37% only in the federal. Again, in the state, there are a lot of state rules also there. Of course, if you are living in Texas or Florida state, there is no state taxes. But if you are living in other areas, there is a state tax also. But if we are paying so much of taxes, but the vast wealth builders, they are not paying much taxes at all. And they're legally, no one is behind the bars. What I meant is, there are legally many ways are possible to save taxes. But if you don't work on it, you will lose it. If you look at these millionaires, billionaires who build the wealth much faster, what they do, those tax amount, whatever we are paying to IRS, that money they are keeping with them and they are reinvesting into multiple things, multiple businesses, real estate, or maybe long-term planning, so that they don't need to pay a lot of taxes. So they're building the wealth much faster. But unfortunately, even we have been doing so many sessions like this for so many years. Still, I have been meeting so many people who has been paying hundreds of thousands of dollars in taxes. But there are ways available. But if you look at, and it is possible only with a proactive tax planning. If you think about taxes for the last year, now nothing can be done. You need to just pay taxes most of the scenario. But at least past is past. At least plan in advance for this year 2026. And this, when I was looking into these millionaires and billionaires, how they are doing it, when I was doing the research, what I realized is they built a strong team. Jeff Bezos, Mark Zuckerberg, they are not the tax planners. Are there? And Warren Buffett has some finance knowledge, definitely has very good finance knowledge, but they are building a team who can support them. If you think that everything you can do on your own, or if you're using your TurboTax to file your taxes, no. Taxes is only one document, but tax planning is important. And tax planning has to be throughout the year. You don't trust me. Already we started having our quarterly meetings with our business owner clients for this year. So for the year 2026, what does it mean is tax planning has to happen throughout the year, not end of the year, not after the year. So you need to build a strong team who can advise you, who can guide you, who can mentor you, who can help you on taking a strategic and decision making, even though you are on W2. And if you are paying some good size of money, taxes. If your income is less than $100,000 I understand there is no much tax liabilities. It's okay to use TurboTax, but if you have homes, if you have investments, if you have real estate investments, or if you have some investments in the stock, you need to work with an advisor who can mentor you, who can guide you, and who can help you. And people think, what tax planning? Okay, I need to pay taxes. Okay, I'm just paying taxes. Just paying taxes, it's not only you're paying money, no, don't think that only it's only money because every month tax gets deducted from the salary, you don't have the pay. And don't think it's only just money. Tax, if you don't do the tax planning, it is not about money. You are missing a wealth building opportunity. Imagine in the last 10 years, if you have worked with the right advisor, if you have been saving some $50,000 every year on the taxes, and if the $50,000 would have invested in multiple investment opportunities, maybe in the stock market, maybe in the real estate, maybe your long-term planning, maybe your retirement planning, by this time, how much it would be? It would be at least $500,000 in taxes. Just that is your money you would have saved. And would have, it's one of the big things is missed wealth building opportunities. In the last 4 or 5 years, market, you know that how real estate grown up, how the valuations grown up, how the stock market ran. So you would imagine 5, 10 years back itself, you would have started saving by focusing on saving taxes rather than paying to IRS. That would have been hundreds of thousands, if not millions, in wealth by this time. So planning, just don't think that planning is okay. What is no planning? Okay, just only paying money. Okay, next year I will see. Next year I will see. How many years you will just pass through like this? You need to work on planning throughout the year from the beginning of the year. So that is how you start. And tax planning is an year-round mindset. The earlier you start, the more you can save. And then your money. We are spending time for our vacation. We are spending time to watch movies on the Netflix, and we are watching movies on IPTV and many other places. We are wasting a lot of time. Rather, spend a couple of hours on how we can keep the money on what we earn. And you may say that, hey, I've been working with a CPA, licensed CPA, he has been doing great. But think once, when was the last time your accountant came to you and say that, hey, Anil, hey, come on, hey, let's start saving some money. If you're meeting your accountant yearly one time just to file taxes, you are not going in the right direction. You can call to anyone in America, any of your friends, ask them how many times you meet your accountant or CPA about taxes. Everyone's standard answer is only one time. But that is not right. We need to meet our accountant at least 2 times in a year. One is at the time of filing taxes, one is after filing, at least what we can do for this. This is called tax planning. That is what it's very, very important. That is the uniqueness what we have with AZ FinTax. We are successful because of this proactive tax planning. We meet all our clients every year for the tax planning also. Let's get to the main topic for today. So, what Anil, what are the deadlines to file your taxes? The tax deadlines are April 15th. By April 15th, everyone has to file taxes for their individuals and also single member LLCs. The April 15th is the deadline and C corporation. If it is and if you are not yet ready, you can file an extension. But extension gives 6 months time, but you have to pay taxes by April 15th. No compromise. Otherwise, there are interest and penalties for not paying taxes on time. You can file the taxes. Filing a tax is like a submitting a document, but paying taxes is what more important to IRS. So filing the document is and compliance, but paying taxes is an obligation. So you have to clear off your obligations of paying taxes, account liabilities by April 15th. And you have time, you can have 6 months time if you are not yet ready, but don't wait till April 15th because if you go in the last minute, your accountant or CPS might not be able to give enough time to you. And I strongly recommend every one of you. I know an average Indian, how an Indian family financially structured. I don't recommend any one of you to use TurboTax unless your income is less than $100,000 or you don't have any other investments except W2, not your house. Because there are so many opportunities are there where you can optimize it. And and if you are a business owner, you have time till April 15th. You have time till, if you are a business owner, if you have time till March 16th for S corporations and partnership, and you can file an extension to get a time till September 15th. So it's very, very important. If you are these days, it is very common. We have a multi-family, multi-member LLC. That is like a real estate partnerships. You and your friends might have formed together and start an LLC and start investing. So the deadlines are March 16th. If you have any S corporation, then it is March 16th is the deadline. And single member LLC, I already told that it's April 15th is the deadline. And organize all your documents before going to the CPR and accountant. First, gather all your documents, your W2s, 1099s, 1099Bs, or otherwise dividend incomes, dividend distribution 1099s, or your business financial statements, P&Ls. All you need to gather all your documents. Yeah, otherwise, what happens, which is a very common for us, is we miss K1s. So a lot of times people say that Anil, I missed to include this K1. Okay, we need to amend the tax return. And K1 or 1099. These are the copies what the other person submitted to IRS on your name. That means, like example, you are not disclosing your 1099 transaction, 1099B, which you received from the Fidelity. You have done some stock transactions. You bought and sold some stocks last year. At the end of the year, Fidelity gives 1099B that has to be included in your tax return. If you don't do it, the Fidelity guys already submitted a copy of this 1099 to IRS. The systems, IRS systems can validate it. How many 1099s you submitted, how many submitted as per their records, what are there. But where are you submitting or not? Are you hiding any information or not? Are you hiding any income or not? Do they validate it? Then you get a notice if you are not including any 1099. A lot of times what I realize is a lot of people open multiple stock brokerage accounts. They may have an account with a Robinhood, Charles Schwab's, Vanguard, Fidelity. They may have multiple accounts, but always they may, because they might not be doing a lot of transactions. They might have done one or two transactions last year, and they forget to get this 1099 to include in their W2 income in their tax returns. So it's very important for everyone to ensure that you are gathering all your documents in advance and look into your last year tax return. Open your last year tax return and see what incomes are included. So it's just a recorrection so that you know that what are the documents you want to collect. And I have seen so many people in the last few years invested in many syndicate investments. And people forget to get the K1 from that. Even people forget where they're investing also. For that, we built it. We are using our in-house tool where we are tracking all our clients' investments at one place. So that's if anyone is interested to sign up, just you can ping me later. I'm happy to share. It's a free account which you can sign up. But all your investments, you can tie up all your stock brokerage accounts, and at any point of time, click of a button, you can see what is your portfolio, what is your balance sheet. If something happens to you, your family should be able to see what are the investments you have, who are the contact details. Okay, so you can reach out to me offline. I'm happy to get. You can see all our contact details on your screens. Then tax rates. So tax rates generally ranges from 10% to 37%. And as a married filing jointly, we have a standard deduction, $31,500. You don't need to pay any taxes at all for the first $31,500 for the married filing jointly. If it is an individual, $15,750. You don't need to pay taxes at all. So for the initially. Then after that, the income goes well bucket system. So whatever the income based on your income level, your tax rate will be decided. But it is on a bucket system. Only the difference on this difference of the tax rates only. Like example, once you cross 24, only for the difference amount only you're paying 32%. So we call a bucket system. We call so. Generally, our income tax rates for Indian families are generally 24% at the federal level. Most of our incomes, average incomes are $200,000 to $400,000 is what our average married filing joint income in Indian community. And And also estimated tax payments. If you are having any business, it could be even a small business, self-employed, even you are a real estate agent, mortgage loan officer, or anything if you are doing. So these are you have to pay taxes on quarterly. Every quarter you have an obligation. If you are on W2, you have an option to. If you are on W2, you every month money gets deducted from the W2. But if you are in 401k, sorry, if you are a business owner, then you need to proactively pay your taxes every quarter. You need to go and pay the taxes, and there are some deadlines also for this. You need to do this proactively. And if you are filing a married file, sorry, if you're filing a itemized tax deduction, I'm not going into very basics. Standard itemized. There are two options we have. If your deductions are less than standard deduction, then you can go for a standard $31,500. If you think that your deductions are more than $31,500, you have an option to go the itemized. Itemized generally high at a very high level. It comes with the five categories. But here one is mortgage interest. Whatever interest you are paying on your primary home, up to $750,000 of loan mortgage amount, you get a tax deduction. Anything is more, you will not get it. And also salt, state and local taxes. If you are paying any state taxes, if you are in New Jersey, New York, California, or Illinois, or anywhere, Missouri, any states, if you are paying any state taxes, that state taxes are become tax deductible again. And also state and local taxes. For the New York State city tax also we have. So like that. So all those taxes are tax deductible on top of that property tax also. Like example, if you are living in a Texas like me, we pay more than 2% as a property taxes. So those are also tax deductible. Earlier, this is a one big change. Earlier, it used to be $10,000 deduction, but now it is $40,000 of deduction from this year onwards up to $40,000. And also charitable contributions. If you are doing any charitable contributions, please ensure that you have a proper supporting documentation. If you have done some donations to the TTA, ensure that you are getting your receipts from the treasury team and also to anyone. So because those are required to submit if IRS asks for it. And also, if you are running any business, if you are self-employed or if you are a business, you have an obligation, you are responsible to issue 1099s and W2s by end of this year, by end of this month, January 31st. That's February 1st is the deadline. February 2nd is the deadline for this year. So you have to issue 1099s, you have to issue W2s also to all your employees. And last year, one of the major change came, one big beautiful bill, and the new bill has come up with Trump. So there are some brand new changes have come up. The first very, very important change, it may impact a lot of people. 10,000 up to $10,000, you can get it as an extra tax deduction this year if you bought any car last year. And if you are on W2, it is eligible. Generally, car deductions are eligible only for business owners. If you are on W2, if you bought any car in the year 2025, and if you paid any interest on that up to $10,000, you can get as a tax deduction. Of course, there are some withholding limits are there. If your income is more than $250,000, then you are not eligible for this. And but the condition is the vehicle whatever you bought on which you paid interest, you should be US assembled vehicles only. You need to get a certificate from the dealer saying that those is US assembled. Then salt deduction, I said, state and local taxes, it's increased to the $40,000, which is a very, very big change. But the income should be less than 500,000. Your total adjusted gross income should be less than $500,000 to enjoy this $40,000 of deduction. If it exceeds $600,000, again it's back to $10,000. Then bonus depreciations, these things we will cover it again next slides. And also one of the major changes is no tax on the tips, no tax on the overtime. If you are working in any restaurant part-time or maybe full-time, then if you're getting any tips, those are tax. No, you don't need to pay taxes for the first $25,000 of income. And no, overtime, if you are working on overtime, if your W2 clearly says that it's a overtime, then you don't need to pay taxes on up to income of $25,000 of income. Then, as I mentioned earlier, this is very important one, $40,000. if you're able to optimize this $40,000, your tax savings itself is $10,000. That means instead of paying to IRS, if you can optimize this one slide, if you can claim up to $40,000 as the expenses if you're eligible, you can actually literally save $10,000 to IRS. If it's already deducted in W2, you get it back. Okay. So if your total income is less than $500,000, you can claim property taxes, state taxes, city taxes up to $40,000. It used to be only $10,000 earlier. And now, if income is more than $500,000 because of the business income, because of something else, then if there is any tax planning opportunity is there, you need to explore it. Like example, recently one of our client based in Georgia state. So there in his income was $800,000. But when you came in the last year end for the tax planning, then now because of implementing few tax planning strategies, we were able to bring it down his income to less than $480,000 from $800,000. So we cannot guarantee 100% tax free, but definitely from $800,000 of income level to $480,000. So the deduction, whatever is there, then apart from those tax savings, now he's eligible for $40,000 of tax savings also. It's a very important one. If you are you need to sit with an accountant when you are working on this solve calculations. Then HSA, health savings account. It has a triple advantages. We almost everyone, if we have a high deductible health plan, you are eligible for the HSA account. You can contribute to your HSA, and the money whatever you contribute, you enjoy the tax deduction. Whatever the money, if the money gets invested into the stock market, the HSA can be used for medical expenses. But rather, you can invest in the stock market and the money can grow tax free. And you can withdraw the money anytime in your lifetime for tax free. It has a triple advantage. It is one of the best account everyone can have, HSA. If you already have this account, last year for the year 2025, you were eligible to contribute up to some for $8,550 in taxes. Sorry, as a contribution. If you are not done, you have time now till April 15th. You have time to do this contribution and enjoy the tax deductions. And 529 plan, 529 plan, we are doing it on a TTA national level, if your state is allowing a tax deduction for the 529, till you have time now. If you are living in any of these states, if you are living in Georgia, Indiana, Kansas, Mississippi, Oklahoma, South Carolina, or Wisconsin, you have time to contribute to 529 for the last year now till before April 15th, and you can get the tax deductions at the state level. 529 plans, 529 plans, there were many changes last year. I strongly recommend everyone to have a 529 to your kids. I personally also have kids 529 for my kids, so we can start saving this money. Lot of time you can use this for even for online classes or for anything for any kids education purpose. We can use 529 plans from the kindergarten to 12th tuition, from kindergarten till the student goes to the college, all the education related expenses, you can use the 529. You can contribute to the 529. The money can be invested in the stock market. Let money keep growing, and you can start using this money from the for any of your medical expenses, or any of the education expenses for your kids, as long as they are qualified. So the money grows tax free. The same money, if I keep it in my bank account, if I in my stock market account, if the money is growing, I need to pay taxes on that. But here we don't need to pay. The money grows tax free. And child tax credit, if we have a kid, you are eligible to get a $2,200 as a tax credit for every kid you have. If you have three kids, it's at 2,200 into three, it's $6,600. That is direct tax deduction. Like example, you need to pay total tax for the year is $50,000. You need to pay to IRS. In this example, if you have three kids, and directly you should be able to get $6,600 deduction from this $50,000 of tax liability. And bonus depreciation, one of the great provision introduced in one big beautiful bill. If you have any real estate properties, and if you are acquiring any assets after January 20th, 2025, that is when the new one big beautiful introduced last year. So it's more than a year now. It's 1 year now. If you bought any of these properties or any assets last year, they may eligible for the bonus depreciation, where you can claim 100% value of the property or value of the asset can be claimed as a deduction in the year one. So if the lifetime of the asset is less than 20 years. So there is a calculations are there, but this is a big booster for the real estate investments. And you can top this depreciations with accelerated depreciation with the cost segregation studies. If you are having a real estate property, and or if then definitely you might be familiar with the cost segregation study. If not, definitely please explore this area where you can optimize our depreciation. Depreciation is a cash. It's a book entry. There is no cash transaction, but you enjoy the tax deductions. So yeah, if you are a real estate, if you are a real estate investments, definitely you should explore about cost segregation, where you can optimize, accelerate your depreciation claims. We do a lot of sessions exclusively for the real estate sessions. Separately, we have done a lot of webinars with the TTA exclusively for the real estate investors and real estate agents. So yeah, we can do one more like that. But now, right, considering the time, I'm not able to go in detail of the slide. Then, if you are running a business, what is a business? If you are a freelancer, if you are a self-employed, if you are running a small kitchen at your home, if you are running a dance school at your home, or if you are doing some free, not free, online freelancing, if you are doing, that is also you are considered as a business owner. As long as you can demonstrate that those are genuine business related expenses, you can claim different types of expenses. Your computers, laptops, monitors, iPads, all those can be claimed as a deductions, apart from the home office expenses, travel expenses. All these expenses are tax deductible. So that means technically you are saving 20, 30, 40% on the money whatever you are spending. And last year, if you bought any vehicle which is more than 6,000 pounds, and if you are having a business or you are self-employed, you are eligible to claim 100% tax deduction in the year itself. So it's a very great strategy. You please work with an accountant, or like actually recently from Raleigh. Okay, one guy reached out to me saying that his accountant is not allowing to claim 100% depreciation when he bought a very big vehicle, which is more than 6,000 pounds, but he's not able to claim it. Then I said, if an accountant is not understanding what are the strategies available, you need to look for alternative. Because as I said, our success is always with whom we work. If our team members cannot understand how we can optimize it, you won't be able to build wealth. Then Then retirement accounts. Retirement accounts are very important. Government wants to encourage you to save money for the future. If you are 401k, I strongly recommend everyone to contribute to the 401k. Don't stop contributions to your 401k. You can contribute 23,500 for the last year. This year it is 24,500 from 2026. And if I'm more than 50 years age, you can go up to $7,500 of add up true up also. And that means literally you're saving 30-40% in taxes on this money. Instead of paying to IRS, literally you're like example, instead of paying to IRS, you're keeping the money with you. In the traditional IRA, if you are eligible for this, you can contribute up to $7,000. And for the year 2026, it has become $7,500. And Roth IRA, one of the great account to have. I want every one of you, whoever is there in this call, please have Roth IRA account. This is a wonder. One of the best word in the entire IRS code is Roth. If you don't have the Roth, if you have attended my sessions, generally 90% of my webinars, I talk about Roth IRA. Everyone is eligible. There are different ways are there. If you don't have the Roth IRA, I strongly recommend you please spend 15 minutes of your time, open your Roth account with Fidelity or Vanguard or Charles Schwab, wherever you want. But please have Roth IRA account. You can have contribute $7,000. Your spouse can contribute $7,000 even though she is not working. And you have time till April 15th for the last year. So still you have time to contribute. And if you're eligible, you can even get a tax deductions on this money. And if you're not, if your incomes are more than $246,000, you cannot directly contribute the Roth. If your incomes are more than that, there's a backdoor Roth IRA concept. These days we have ChatGPT. If you know the word, go and type backdoor Roth IRA. You will come to know everything about backdoor Roth IRA. If your incomes are more than $246,000, please read out about backdoor Roth IRA. The main door is closed. There's a legally you can contribute to the traditional IRA from there to the backdoor IRA. This is a legal way. So don't miss this opportunity to build the wealth. Then R&D tax credits. If you have whatever, if you're doing any innovation, if you're developing a product, if you're developing an AA product, if you're working on some new process, systems, technology, or improving in the current process, if you're doing any innovation, government wants to support you. Whatever money you spend, 10% of the money, whatever you're spending, they're going to give it back. Including if you're running a restaurant, you are trying something new recipe, whatever money you're spending on that experiment is tax deductible. You get a tax credit also of 10%. Last year, I know many of IT companies employees were sitting on the bench, and at the same time, many business owners ask them to work on some product development. If that is the case with you, you are eligible for the R&D tax credits. You can reach out to me. I will guide you how you can claim these amounts. Opportunity zone credits, opportunity zone funds. If you have any capital gains last year, you can still have time, 6 months of time to invest in opportunity zone funds, and you can defer your tax liabilities. Like example, in the last November or December, you made some good capital gains on your stock market. You have time now till now to save taxes. Opportunity zone funds, you can defer your tax liabilities and avoid IRS red flags. You because of using of AI, the number of notices and the number of audits are going to increase substantially from IRS. Please don't work with an accountant who compromise on a lot of things. Don't be genuine, be fair. Don't think that if you don't get the IRS notice till now, don't take it for granted. Once they find out you are a fraud, if you are doing some hiding, if you are hiding some information, hiding some income, or you are claiming some wrong deductions, your file will be red flagged and you are expected to get a lot more notices in the future. It is not work of doing adjustments. Rather, work on tax planning. When you have a alternative tax planning opportunities are there, why do you want to do compromise? Don't do that. Don't work with the people who just who work. I mean, I've been seeing, I've been hearing there are so many people who works from India. They don't have licenses, or they may have licenses. What they do is they whatever the tax liabilities you have, like example, you have a $20,000 of tax liability. They say that they will make it as zero and you pay me some share of the savings. That won't work that way. Till now, in the history of our AZ FinTax, we didn't even have a single audit notice. We stick to the values. We come up with all the planning strategies. Yes, there is a tax liability. Let's see what all we can do legally. So please don't compromise. Number of audits are going to shoot up. Identify your right partner. Then FBAR and FATCA reporting. If you have more than $10,000 of money or any assets in international accounts, then you have to file FBAR. At any point of time, if your international bank accounts touched more than $10,000, you have an obligation to file FBAR, and you need to disclose all your income. If you're eligible, if it's applicable, you have to disclose all your investments or not investments, all your financial accounts, and whether single transaction or all accounts together, all financial accounts together. If it exceeds $10,000 or $10,000 of money, you have to file FBAR. FBAR is a foreign bank account. It's only reporting, you are not paying any taxes. Like example, you have a bank account in India, you send some $15,000 to India, asking your parents to withdraw. They may have your debit card. You have to file FR. If you're sending to your personal account, if you're sending to your parents' account, that's a different story. And again, there is a gift tax rules are there. Please don't forget about it. Okay. So, but if you're sending to your account, you have to file FR. And the definition of a foreign financial account includes savings account, fixed deposits, bank accounts, security accounts, demat accounts, commodities, commodity accounts, options, mutual funds, life insurance policies also, cash value life insurance policies also. All these accounts has to be disclosed to the Department of Treasury. If you have real estate properties, you don't need to disclose. But if you're having any rental incomes or any incomes from the real estate properties, you have to disclose in your income tax return. So the due date you need to file tax, you need to file FR along with your tax return. April 15th is the deadline. And at the end, what I meant is you need to build your team who can guide, who can advise. In the 45 minutes of time or 50 minutes, how much I can cover? I can only talk about a generic coverages, but in detail, we can talk on tax planning and one-on-one. It's very, very important. Doesn't matter where your accountant is. Don't work with the person who is okay. I'm working with my accountant for the last 10 years, 15 years. He lives in the same community. He picks my phone whenever you want because he doesn't have enough work. He picks phone whenever he wants. If it's really like example, if you're going to a restaurant, if it's fully occupied, if you're waiting, that means the restaurant is doing a good business. If the restaurant is always free, you get a seat or you get seats all the time, means the restaurant is not up to the standards. If an accountant is free all the time, he just waits for your call, even though he has 1,000 clients, that what does it mean? So it's very, very important to build a strong team. Doesn't matter where your accountant, at the end, you are paying your taxes. You can easily break. If you're not happy, you can say that, okay, I have an alternative. You can come out. And we are here to help you for anything on any of your financial needs, finance, tax, or including mortgage loans. If you are looking for a refinancing, just send an email to hello@azfintechs.com or you can see the contact details. Or you can see our call, you can reach out to us. And thank you very much. Thank you. Thanks for TTA for this opportunity. And let's get into the Q&A session.
Thank you. Thank you so much,
Thank
Anil,
you.
for the beautiful informative session. Uh, we have a couple of questions from attendees as well. And TTA community, please post your questions. Anil Garu is here to answer all the questions. Okay. So yeah, we're going to take over the questions. The first question we have is from Naresh. If someone lost money because of an online fraud, is it possible to claim the loss while filing the taxes?
Of course, yes, you can do it. You can do it, sir. Yeah.
Okay. I have another question from Rekha. Okay. Hi, Anil Garu. If we changed employer in the middle of year 2025 and the previous employer is not providing W2 of 6 months, can I file only with 6 months of W2 from current employer?
Rekha Garu, technically no. You have an obligation because based on your W2 slips, so your monthly salary slips, you should be able to prepare to some extent the income level, income details. You should be able to calculate, and together you need to disclose both the incomes together. Or you can even call IRS. They can also get you a details of your W2, like what are the total incomes and everything from the previous employer. So, in the worst scenario, still go whatever information you have, please go ahead and file your taxes, Rekha Garu. Once you get the details, you can amend it. So, but whatever you have to maintain the documentation to prove that you have given enough efforts to reach your previous employer to get your W2s. Okay, so and also just for information, W2s you get it only in the month of January. Even the, like example, immediately like example, you left the job in the last year June, but you need to wait for the W2 till January of this month. So generally, that's how the company works. Generally, they give W-2s at the end of the year, in the January. So I assume you will be getting your W-2 soon this month. So yeah, thank you. Next one, sir.
So there's one
Right.
more question from Hannah. What is a fresh start program?
No idea, sir. I don't know what. Okay, are you talking about are you talking about tax debt, Hannah? If so, government is giving an option. I assume you're talking about tax debt. If you have some tax liability, the government is giving an option to go and pay it in installment program. Like example, whatever you got a notice from IRS, but you disagree. You have a right to disagree whatever IRS says. And also, if you already you have some tax liabilities already, you can go for a monthly installment plan, or there are different options IRS can give you to maybe they come for settlement. Like example, you have $50,000 of tax liability. If you can explain to IRS your current financial problems, why you are not able to pay, they will give you on they can sit with your settlement. Or otherwise, they will give you an option to pay it on installments. But of course, they need to pay interest also on that. But you can avoid penalties on.
Thanks, Anagar. And there is another question from Kavita. So, what is the tax percentage for stock options?
So stock options are generally how it works is if it, like stock like example I hope you're talking about there could be two interpretations which I can say. Okay, and she has an restricted stock gains. Okay, RSUs, we're talking about RSUs, Kavita Gara, I understand. So RSUs, even I was working for Amazon, I was getting RSUs. So whenever they give RSUs to us, they will add that money to our W2 income. So our W2 income goes up. But when the W2 goes up, what they do, they sell some stock to pay taxes also, so that we will not have extra burden. That's how the structure is designed. So generally, the withholding taxes there are generally they do it for 25-26%. But in simple summary, those are just your like W2 income. They are you are eligible. You have to pay your regular tax rates. Whatever the tax rates you are, you need to follow the same tax rates to pay taxes on RSUs. And gains, you said. Gains means okay. Like example, today I got Amazon stock. Some RSUs got allotted to me, and after 2 months I am selling it. Today, whenever I'm getting this money from Amazon, I need to pay regular taxes on this money. But from now, after 2 months, if I want to sell, if there is any increase in the value, like example, I got the stock for $200, now it's $250. The difference is considered as a capital gain, and you need to pay short-term capital gain if you are holding it for less than 1 year. If it's you are holding for more than 1 year, you need to pay long-term capital gain. That's
Okay, thanks, Anil. There's another question from Kiran Kumar Reddy. I have purchased the Honda CRV in 2025 with loan. Is this purchase qualifies tax savings, or is the tax savings applicable only for EVs, electric vehicles?
Okay, as I mentioned last year, if you bought a vehicle, if you bought a vehicle last year 2025, and if you're in W2, if your dealer can give a certificate saying that the car is assembled in US, then you are eligible to get a tax deduction for our interest payments. Yeah. So I covered it in our webinar. It is a live, it went on live also, I believe, or otherwise you can watch the recording later again. So up to $10,000 of interest can be claimed as a interest payment to your car if you get a certificate from your dealer.
Okay. Yeah, that's all I have so far.
Anil, one question, Anil. Yeah,
Yes, sir.
in the last year, if we paid or if we contributed to 529 plan, so there we can claim up to 10,000 deduction, right? So the same amount can be withdraw in the same year and use it for tuition fees. So we can
Yes,
claim
sir.
that tuition fees exemption also we can claim both.
Okay, no, sir. No, the contribution you get as a tax deduction. The
Okay.
money can be used for the education tuition fee, which is considered a tax-free withdrawal.
Oh, okay. So we
You will
cannot
not get
submit
any
the
further
tuition fee.
deductions, but you can use the money for your education expenses.
Okay. So we cannot submit the fee receipt provided by the colleges to once
No,
again claim.
no, only then they allow you to withdraw. Otherwise, you have to pay taxes on it.
Oh, okay, okay. Got it. Yeah. Thank you.
Arun Garu, sorry, Anil Garu, it's always great to listen from you. And every time we listen, we get something new, interesting from you. Thank you. I
Thank you,
have
sir.
one question. Uh,
Please.
from this year onwards, like you cannot contribute to 401k catch-up contributions if you're age 50 or 60 plus, but it goes into Roth IRA. Is it worth investing into Roth IRA in that case?
Absolutely worth it, sir. There is no better word than Roth, irrespective of your age. Actually, I have a client who is a doctor with a good practice, and he's a 76 years, still he is working. Still, we recommended to contribute only in the Roth because till you alive, the money grows tax free. Next generation, whenever they get, they don't need to pay taxes also on the Roth. Otherwise, if it's a for a regular one, the next generation, whenever they are withdrawing, they need to pay taxes. So yes, sir. Still, Roth is absolutely worth.
So that's, I mean, it's not the back door, right? It's directly going into the
It's
Roth
a
IRA.
direct. It's a direct. It's a direct. Actually, there is a very good initiative from the government. I should say they're
Okay.
encouraging people to invest in the Roth.
Okay.
Yeah, there is one more question, Anil Garu. When someone takes 401k loan, can the interest paid for the loan be added to the expenses when filing for itemized deductions?
Interest paid to no interest paid on 401k
Loan.
itemized deduction. Answer is no, sir. No.
Yeah,
But if
it's a
you're
question from
investing this
Anusha.
money in the business, then you can claim it as an expense there. But no, otherwise 401k regular for the regular usage, no.
So will it be treated as a personal loan kind of thing?
Yes, sir. It's a personal loan. You're right.
Oh, okay, thanks. Thanks, Anil Garu. And good I learned from you today about that 529. I didn't know anything about that earlier. Thanks so much.
Good,
And
good to hear.
yeah, any more questions, people? Oh, there is one more
This
question
is one
from
more question.
Yogesh.
Yeah.
I was on STEM visa where I was not supposed to pay Medicare and SSN tax. Is there a way? Is there any way that I can get those tax back? If yes, how do I get it?
Super.
That's the
Very
first question.
simple. When you claim your tax returns, you can get it back. If you need any help, Yogesh, I can help you offline, but your accountant should be able to pull you back that money. Pull back money.
There is another question from Yogesh. From November 2025, I changed my visa status from STEM to H1B. Now I have to pay tax, right? But
Yes.
how will it works? Yeah.
No, yeah, it works. All this magic can be done in your tax return. We have options, different options. Tax return, actually, what you see is very simple, but in the back end law, it's very complex. There are a lot of calculations are involved. So, yeah, it can be done. Yogesh, same question. Whenever you're filing your tax returns, please work with an accountant and get these things done. Yeah, and but don't use the turbo tax. I'm not very sure to what extent it works, but if an accountant should be able to do this for you.
Okay. Thanks, Anil Garu. And there's another question from Raghu. I have a pension plan from my employer. Am I eligible for to contribute IRS additionally?
Yes. Answer is yes. You can eligible. As I mentioned in my presentation slide, if your income limit allows, you will get a tax deduction, or otherwise directly you can contribute the Roth IRA. But you are eligible to contribute the IRA even though you have pension plan.
Hope, Raghu, that helps you. The next question is from Sudha. Submitting itemized deductions, is it valid? As someone says, if we do, we get IRS queries because of itemized
That's
deductions.
a half cooked information. Absolutely worth to file itemized if you are eligible, if you are genuinely all the expenses are right.
Okay, we have another user, name undisclosed. For FBAR, do you have to disclose NRE and local or NRA accounts?
You are right. NRE or NRO accounts are foreign financial accounts. They are not owned by American banks. They are owned by the Indian banks in general. So yeah, you have to disclose it.
Okay, thanks, Sangaru. There is a question from Priyanka. Can we take the funds from employer-funded 401k to Roth IRA? So basically, moving the money from 401k to Roth.
Answer is yes, sir. But only after you quit your job, then it is accessible and you need to pay taxes on that. I personally say it's absolutely worth to pay conversion.
Okay, thank you. And there's a question from Desika. Does backdoor Roth have same benefits as regular Roth?
Yes, sir. Same benefits. Yes. No change.
Okay, thanks, Anil. Um, I think that's all we have so far. Any more queries? Any more questions? Anyone? Please
Anil sir,
post on the chat.
one more in continuation to Sudhakar's question. Uh, we if we have separate Roth IRA account, for example, in Fidelity, at our employer side, yeah, if as part of this 2026 change, if they want us to contribute to the Roth IRA contributions, catch up amount I'm talking about. In those cases, can we contribute to both your Roth IRA at Fidelity and Roth IRA at employers level?
Okay.
Why?
Yes.
Because we have
Roth
limitation, right?
402 is different from Roth IRA. IRA doesn't need any employment. You can directly open it at Fidelity or Vanguard. But yes, you can do both.
Both. Okay. Thank you.
So we'll give some more time, Anil Garu, for people to pose the questions. Meanwhile, I have one question. Is there any special promotions or discounts for the attendees who joined today or like the TTA
Excellent. Yeah,
members?
as I mentioned, actually for the TTA only in the beginning of the, because some people may drop, so that's what I said in the beginning of the presentation itself.
Mhm.
So 10% is what we are going as an exclusive for the TTA members if they're filing taxes by February. So we have time 1 month if you can
Mhm.
work with us. So definitely because of tax, our amounts are yeah, 10% is what the discount we are going to.
Okay, that's really good because I know a lot of people who joined here, they really do the TurboTax filings. They just submit the W-2. Okay, they're not much into detailed taxation. I think they're pretty much interested in getting in contact
So
with you.
what happens is we are unique in AZ Fintechs is unique. We do a free tax planning for every client.
Mhm.
Imagine it is not easy. And we are doing it consistent. The reason why we are successful is we do the tax planning. Robotax will not do any tax planning for it. It's only a postmortem job. Or even any accountant. You call anyone in America, no accountant does the tax planning in general. So everyone only file taxes. But after tax filing, we chase our clients. We send so many emails, text messages. Oh, come on, please schedule a one-on-one meeting. Please schedule a one-on-one meeting. So we do tax plan. That is where the magic happens. Whatever past is, you cannot do past, but at least for the current year, what can be done? That's what the greatness. Yes, definitely compared to the turbo tax, we may be more expensive, couple of hundreds of dollars, but the value what we bring on board is much, much higher.
Yeah, that makes sense. And I really like your statement. Initially, you were saying like the success depends on like whom you work with. Yeah, that is a great point, I would say.
Definitely, sir. Definitely. That's what I believe on it. I believe on it. And right now, anyone, even when we are working on our employment and W2, still our team decides our productivity based on the team performance. Our team is very, very important. And that's what I said. We are very much happy. We have a zero audit still now in the history of our AG Fintech, sir. We have thousands of clients, many states of clients, but the quality. If people look for quality, we most welcome. If you look for cheap services, $50, $100, we are not the person.
Yeah. Thank you. Thank you, Anil Garu. One question from Yogesh, how to reach out one-on-one and what is the best time?
Very simple. You just call to, you can see all our contact details on the screen. You can see email, contact, or even I will share my same the details also. And it's very easy. Straight away you can call us, or you can sign up in our account. So I am sharing my you can set up an account with us directly, and we will reach out.
Yeah, that might help all the attendees, Anil Garu. Okay.
Yes, sir.
Mm.
Yeah,
I
can we
think,
close the Q&A now? I don't think
Yes.
we are getting any more questions.
yeah. So, Kavitaka or like
Mhm.
Shivana, yeah, do we have any statements, closing statements?
Thank you so much, Anil Garu. As always, you're helpful, and I also learned a lot today. And Sudhakar Ga's question is actually in lines with the questions which you usually have. But yeah, make use of all the information which Anil Garu provided, and also reach on his team, on his the email or the phone number, so they can help you guys. Thank you so much, Anil Garu, and thank you, Kranti, and the team from Miami. So it all helped so many people. This is the first webinar for the tax, so don't worry about that if you guys miss, or if your friends or families missed this webinar. Please watch for the next upcoming tax webinar, which is on the February 5th at 8 p.m. of Eastern time. Is that what? I think so. 8 or
Yep.
9 p.m. So the information will be shared on our TTA family, and whoever is actually in touch with Kranti from Miami also. So share with your friends so you can use that, because some people are busy on Saturdays. So there is one more coming up. So we purposefully slated that for weekdays. So just to make sure that we are getting attendance on the weekdays as well. And also, I would like to mention there is an immigration webinar coming up on 31st January, which is also scheduled on Saturday, 7:30 p.m. So yeah, we'll be coming up with more and more of these information sessions. If anybody want any help directly, you can reach, and as well as reach us out on, we have secretary also on the call. So secretary at telanganaus.org, or, president at telanganaus.org, or you just can do any chat with our on the telanganaus.org website. We'll be able to help you if you have any questions on immigration or tax or any other stuff. We have a lot of other services. Thank you, everyone. Thank you so much, Anil Garu, once again. We'll looking forward for the next session. Thank you, Kranti.
Yeah.
Thank you.
Thank you.
Thank you very much. I shared my contact details and also a link to sign up and upload. You can start working directly. So it's like our prices are competitive. It's like a restaurant price menu, very competitive. You can just start working. You can start uploading. You can start working, or you can directly call us for a specific code for a scenario. Thank you, sir. Thank you
Mhm.
very much.
Thank you so much, Anil Garu. Thank you, everyone, for joining this session and keeping this more interactive. Okay, from TTA perspective, we'll be conducting more informative sessions and events. Yeah, please try to join us. Thank you all, and especially.
Kranti, congratulations for your new chapter, and you already started working and amazing. Good.
Thank you, Anilana. Yeah, with all your support.